Starticus are in Belfast and we're delighted to be talking to the team at Tughans. Tughans is one of the largest leading commercial law firms in Northern Ireland and they've been operating here in the city for 121 years. Through a series of Starticus chats, we'll be talking about many of the legal fundamentals a startup will need to know as they grow and scale their business. We're delighted today to be joined by John McGuckian from Tughans Solicitors. So the first question is, what do you need to do to become investor ready?
Okay, so there's a process by which investors want you to be in a place to be able to be investable. So you need to understand yourself, the nature and scope of your own business. You need to understand which type of investment and which investors you want to approach. There are a myriad of venture capital investors out there, so you just need to be informed and the information is out there. You need to understand the level at which you're going to pitch this at, what share of the equity you're willing to give, and also what your market is. So you need to fully understand that.
Okay, perfect. And when is the appropriate time for you to look at investment as a business?
Well, it's there from the start, from before the start if possible. Mm-hmm. So in an ideal world, we would all be able to get money from the banks rather than give up equity, but in the nature of venture capital investment, that doesn't really exist. So you need to be mindful of the fact that it's going to be parties investing on a riskier basis. So you need to work with them and give them as much information. So it's the venture capital parties or angel parties need to be brought along with the story. They need to understand your business. They need to understand the potential growth and that you are the right people to do it. A lot of people state we invest in people and as much as ideas, so you need to develop that rapport as quickly as you can.
Perfect. So you mentioned people, and I'm sure one of the criteria that is applied as an investor is looking at the team and the founders. So what are the qualifying factors that make you investment ready?
Well, different tips apply, but being organized is key. Being able to answer the questions that you will field. Different investors look for different things, but generally in the technology world, you are technology literate, so being able to access the information as readily as possible. Having your company in an organized state, so ability to produce documents, but also having your shareholder base brought along with you, keeping them up to date and informed through the process. Those are the main areas that I would look to.
So John, we talked about criteria. Is there a checklist that a startup or a business should be looking at if they're going to be investor ready?
You need to have a solid idea, and you need to have protected that idea. So that's one thing that's key. All of the startups will have different variations, but you need to understand that you own the IP. So that's one key part. Then you need to ensure that the people are ready, so the people are bought into this. So there will be a small management team initially, and potentially some employees. They need to understand that everyone is on the journey together. They need to understand also the market. There needs to be a market, and ideally a big one. This is a risky type of investment that venture capitalists make, and they need to know that there will be rewards at the end of it. In an ideal world, although it's quite hard to always prescribe that, you should have an eye towards your exit. Most venture capital investors would like an exit within 5 to 7 years. Some sooner, some will be more patient and willing to stay for the journey. But you should have an eye to who that potential exit is to. Is it to a larger player in that market? Is it to one of the the multinational companies? Or is it to potentially larger private equity investment as the company grows?
Okay, perfect. So one of the key things in a pitch to an investor is not just obviously the scale of the market and what your business is going to do within it, but how you're going to exit that business as well, exit that market.
Absolutely. If you're able to ID, some of the best companies we've worked with already know who they're going to sell to because they're disrupting the market. The idea that they have is changing the dynamic within a particular area, whether in tech or healthcare or cybersecurity. They know their market well. They will know the potential acquirers or investors. So it's always having an eye to that. One thing is also key, like when you start to, and you have to have traction, you have to be investable. It's being able to scale up. So if your product is proven to a certain degree, if people are showing interest in it, If they do start to show interest in it, either by investment or by becoming customers, you have to be ready to scale up and go with it. So it's being as nimble as possible to be able to do that.
So, I mean, in the marketplace as it is now, are investors looking to see businesses that have turnover as well, or is it all based on the potential?
Well, turnover would be super, but in the startup and particularly in the tech world, it's relatively rare that revenue exists in advance of venture capital investment. You should have proved your concept. So literally, there are, certainly in Northern Ireland and through the wider UK, there are proof of concept grants that get you to that stage of the idea to either a product or a platform. So you have to have that in place. If there is interest, if you have customers, that's ideal. If there's revenue flowing through, but there has to be interest, it has to be marketable. So more often than not, at the venture capital stage, there isn't any revenue in place, but there has to be key plan mapped out how you get there. So you have to show potential milestones as into what you're going to achieve, not least how you're going to spend the investors' money, like clearly defined as possible, and also what those milestones are that you want to get to.
Perfect. And one would assume, leading on from that, and that is why the team is so important, because one assumes you're buying into the team and their vision as opposed to the turnover on a monthly basis so far.
No, absolutely. You have to, depending how wide and varied the team are, some like to surround themselves with, finance people or otherwise, but most of the successful companies are as lean and as nimble as possible. So you have to be willing to put the hours in, you have to be willing to validate your idea, and then you have to be willing to sell it. Like one thing that we will get involved in down the line for companies is assisting them as they get customer contracts in place and ensuring that they are in place. But an idea is great, but it has to be marketable and you have to be able to sell it and sell the story with it. Companies' ideas will not just go on a linear journey. They will have to deviate as customers require it or investors want them to, so you have to be able to do that.
So finally, John, I just want to ask, what are your top tips on how two parties can come together and engage with each other? What would be the process, or what do you think the best way to do that is?
Okay, so the initial engagement, you have to have that engagement with the investor. So go as early as you can to potential investors and go wide. Have those conversations in advance of needing the funding if possible, but have as many of those conversations as you can, and don't be scared to speak to them too early. As regards tips, I mentioned before, be organised, be in place that you can answer the questions, have your shareholder structure clear. Smaller things like the statutory register of the company, have that in place. Engage with your shareholders. You may already have other smaller angel investors if you're going towards a venture capital round. Engage with them, bring them along with the story. They're more inclined to potentially invest themselves alongside venture capital, but at the very least, you will be in a position to move as quickly as possible. Timing, have a realization that albeit this world, and particularly the tech world and the venture capital world, does move quickly, but investments do take time. It can take, there's no set pattern, it can take between 6 and 9 months for initial engagement through some due diligence and then towards the investor documentation. The other tip is, read up on this process. There is some terminology that is extremely common in this world, but if you're coming at this from being an engineer or a software designer, you won't know that. So there are terminology that's used in shareholders agreements, etc. Good lever, bad lever, drag and tag. Become au fait with those, because those are the aspects of that will come on board when you get your documentation in place. And it also will differentiate you from other parties, because investors will use those terms readily. Yeah. They will initially perhaps seem like gobbledygook, but you will get there and you will understand it. So just being au fait with those types of terms. And I would be inclined to say this, but engage with advisors as early as you want. Advisors will work with you. Certainly we have a vested interest in working with the startup community. We will, charge accordingly. We understand that companies, so we're keen to grow with them, but have that advisor in play, whether from a legal or financial perspective, without going overboard, but making sure you're kept right.
I think that's a key message that we're getting with all the chats that we're doing, obviously with Tughans, is making sure obviously that you have the right process in place as early as you can possibly have it as well. So obviously in terms of investors and advice obviously to connect, we're looking at be patient, have your information in place, and make sure obviously that you understand the terminology in the process.
Absolutely.
Perfect, John. Great, thank you so much for your time today.
Okay, thank you.
All the best.